Start from a daily chart. Yesterday, it revisited the range of the order block that I talked about. The important order block inside of the range. Why? Because it comes from a shakeout. It's the one that created divergence with Tuesday's low, right? And then sent a new range high, right? So key order block, okay, for daily order flow. Now you can see so far made a low of day at the upper half of it. In my opinion, structure remains bullish until 50% of this order block is claimed, right? Displaced through strong closures, bearish weekly profile, which could happen today, right? This could be one of the reasons for price displacing lower. We'll look at the pre-MRAs in a second. But yeah, overall, there's a lot of, right, the ranges here in here is high resistance, so meaning there's support at these levels, right? We can see the range of order blocks. We can see a lot of wicks cutting inside of this range, right? So main discount PDA on the daily chart, the order block. Okay, this is not a level that you necessarily have to keep on your chart, but just to pay attention to how, around new opens, what the previous they did at the quadrants of it. Okay, did it displace through it? Did it reject off it? Did it create a divergence inside of it? So discount array of interest in terms of sell side liquidity, right? So discount arrays, there's a range low here, Friday's low. I wouldn't really say this because again, I'm still bullish. I believe that price will trade higher from here. I don't think that price will break structure down personally. But I mean, that I think or that I don't think of it doesn't really matter because what's important is order flow. Whatever the order flow tells me in the moment. So far, the order flow is not telling me that price is ready to trade lower, right? It has respected 50%, right? It hasn't even traded to it of the order block in question, right? Because if this order block is broken, then structure is also broken on the daily, right? And this divergence at the highs would have been enough to confirm that, right, there's a real market structure shift in play here. So discount array, price is obviously right now trading inside of a fair value gap. It's a relevant PDA to have in your chart when you're trading, but only if price is in the vicinity of it, right? Because if New York opens at these levels or opens at these levels, probably it won't need to go all the way down to revisit it before continuing lower in the case of say an expansion day. Let's say like right now it's probably using its quadrants very accurately because that's currently the higher time frame PDA which price is trading in. Right, you can see the reaction yesterday, the New York session, the opening range, right? How price respected 50% of it as an inversion PDA, sent prices lower, and then in here we'll see on the 4-hour what price ended up projecting, right, before trading higher and starting to reclaim this this bullish PDA, which is the daily fair value gap. Right, you can see how it's using its quadrants to build a range, build an accumulation of longs. Right, you can see how the reaction every time it trades around the quadrant, right, how it creates swing lows, swing highs, creates fair value gap. So important level, yes, but only relevant if at the time you're trading price is in the vicinity of it. The rejection block here, okay, this is the main premium array in my opinion. If price will be rangy, right, if this week is going to be some kind of range week, then price will likely end up projecting around this range. Okay, so any failed expansions into these levels, I can see that yesterday's high created the divergence with Monday's high right at the upper half of it. Okay, so this is a sensitive level and it's relevant to the current range that we're in. So premium array and discount array of interest, right? if New York or the FOMC event is in the vicinity of it, watch and see how price reacts to these levels. On the 4-hour chart, we can see that yesterday's profile, first of all, being a classic sell day, but one that found a reversal, a lower time frame reversal. Okay, this is a lower time frame reversal inside of a higher time frame PDA, which is the one of interest from this week. Why? Because it comes at 50% of the previous week's range, right? That's the main order block. High probable order block formed at 50% of ranges. Okay, and this favors expansion. Now, it's not because so far the wick held that price can make one final sweep, because overall, I don't really like that it left this volume imbalance open. I would have liked to see it tested before moving higher, which could still be a possibility. Okay, because at these levels there's a breaker, which we'll look at on the hourly chart later. There's a range of fair value gaps. Price does come from a divergence. Right, this in here was a double purge. Sorry. No, I think we could see it better on the hourly. On the hourly chart, we'll see the breaker. We'll look at that. Having these levels on your chart, right? I'm saying this is a level that you need to have all the time on your chart, okay? Because it's very relevant to the range, as it's the order blocks I was saying. It's also, even though now it's, this is part on the 4-hour chart of, what I meant to say is, this here won't be now part of the 3-day look back low, right? The current 3-day look back low is at these levels, but this remains nonetheless the dealing range that we're in. Why? Because this was the final shakeout before where price currently created a high. Okay, and so far what did price do? It retraces to 50%. It has created bearish structure coming into it though, right? So it's going to be very important to see how price trades inside these levels. Does it reject at a key time of day any divergences around these fair value gaps? Okay, maybe one trades here, the other doesn't, right? Followed by bearish structure. Or does price revisit again the order block, could create a divergence, and then from these levels continue trading higher. Let's look at the hourly chart. We can look at the 3-day look back. Right, and in here, this is the breaker that I'm talking about. Now, at these levels, what did we have? We had a range over here. Price takes out the lows, followed by the highs, and then price displaces the range. Okay, so what we have here, the series of down close candle, is a failed order block. Right, what I was talking about in the moment here when price had opened yesterday was that price had created an order block at these levels, right? It traded above 50% of a large series of down close candle that took out buy side liquidity. Right, but then throughout the day, what did it end up doing? Right, throughout London, inside pre-market, expanding lower. Right, so breaking structure here. Right, this here is a market structure shift when it closes below this low. So very important to see the reaction around these levels, okay? If ever price were to range inside these levels, right, and then manipulate lower from it, it makes sense, honestly, because so far we're trading I think until proven otherwise, we're trading a classic sell week. Do I think it's going to end up being classic sell week? No. But so far, this is what order flow is telling me, right? In terms of discount, right, low-hanging fruit target in case of shorts, obviously this is a very good level because there's a volume imbalance below the range, the 3-day look back low, okay, which is the low of Friday. So key premium array in the range. Okay, and if we're to look at the previous day's profile here, right, this profile here, it's a type of classic sell profile that sees a London close reversal. Right? It's like a kind of a mix between a New York reversal and a classic sell. And the reason why I believe is that and not a swing to Z was because I think that this looks more like a reversal so far than a consolidation phase, because there's divergences, there's a fair value gap, there's an order block. Okay, so a lot of there's a breaker here, right? The high that leads to the lows that now has been closed above, right? So until invalidated, price remains bullish. But what I'm saying is just watch out at a key time of day if price rejects at these levels, or if it doesn't, right? If it displaces through them, watch out if price comes back to them at a key time, say New York. Okay, say the profile of the day is bullish here, right? Then price finds rejection, eventually displaces through it, right? And then revisits it, right? Reclaimed order block from these levels, right? And then trade higher. That can be a good trading opportunity. Okay, so premium rate of importance to have. In terms of the discount array of importance, honestly, I would say the order block. The order block here will be important to gauge bullish order flow. You can see that there's an order block at the upper quadrant of it, and there's a fair value gap at 50% of it. Okay, so even if you want to refine it in the moment that you're trading, right, you can be grading, say, the order block itself. So far you can see that price respected 50% of it. Right, say in the moment price rejects here and New York opens at these levels, right? And you see New York retrace into here. Pre-market leaves a fair value gap. Right, this can provide a good trading opportunity, but overall the order block. Okay, I'm just saying that inside this order block there's also other PDAs that can be used to frame a trade in the moment. So have these two levels on your chart and see how price moves around them, any fair value gaps around them, right? Fair value gaps created around the quadrants, key time of day, any divergences created inside of here. Okay, say something like this, right? Then New York retraces in here, and here we have the pre-market lows, right? And from these levels trades higher. Okay, so it can be used as the breaker that it is right now, or as a reclaimed order block. Same thing here for the order block, right? So far this is an order block, but this could also be used during the day. Okay, say if price is really bearish and starts to reject from these levels, right, then you anticipate that the profile of day will be bearish. Well, you can use the quadrants in the moment of this PD array already as a breaker, right, because you're anticipating lower prices. Any divergences created, okay, say that there's a divergence created with this low here, which is a fair value gap, right? Price trades to 50% of the order block, makes a divergence key time of day, break structure. Okay, this can be a good opportunity to trade long. So obviously a lot of scenarios possible, and it's obviously FOMC, so a lot of people argue that the fact that the New York sessions are high probability or low probability, into FOMC, but whatever, man. I've seen so many days where price was super clean inside of New York, so you just have to see in the moment what the order flow is. If there's a good setup, a good scenario, right, in terms of the daily profile, say, London rejected at some important level, or pre-market created a fair value gap through an important level, and then you come inside New York and this thing has happened, right? The fair value gap has happened, or the divergence, the sweep, the break of structure has happened, and you're coming inside New York at these levels, and you're like, shit, price went to a premium level, created displacement. It left me something inside of the range for me now to take part of this. All right, New York revisits these levels. That's the kind of idea. Personally, I'll wait for FOMC. It's not that it's high probability or low probability or whatever. Again, it all depends on the context of the moment, but it's because AMP increases the margin, so I prefer to simply trade once the shakeout passes. Essentially, if there is a shakeout, I usually tend to look for the trade after the shakeout, so past the press conference, right? FOMC, deliver has some kind of double purge, right? And then I want to trade the reversal after the purge. Could be bearish or bullish. In this example, it's bullish, but it could be bearish. But this again will all depend on the profile of day. You have to understand how did the market trade around these PD arrays, right? The premium array and the discount array. Did it expand through it? Did it consolidate around them? Right? These are all important things. If you come inside the FOMC event and all price did was this, well, what do you think is going to happen? One of the highs or the lows is going to be attacked, right? And then you have to understand if it gets displaced through or swept through, right? And then you take the trade that comes after it. But at the other time, if you come inside the session tomorrow and price did this, right? Then FOMC opens at these levels. What could it do? It could probably, range inside of here. That's why the context of the moment is always the most important. So keep these two PD arrays on your chart.